Hey guys, what's going on? So, essentially, yeah, here and now on Sunday, and just basically getting my Sunday market breakdown down. So, what I will be doing is I will be comparing this to my mentor and some of my accountability group, and just having a look at some of the pairs I have, and then if there's anything else that I think I need to make adjustments on, or I've either overanalyzed, underanalyzed. I'll basically look at that. So one of the good things about having other people around you that trade a similar way is that, you know, they might be able to point out something you may have not noticed, something that you um, weren't able to focus on fully. But also, it's one of those things that's interesting. I'll tell you where it's really benefited me before is where I've been unwell in the past, and due to not being very well, having that accountability group was very helpful. Or not only that, having more experienced traders around you was very helpful, because that then gives you that sort of mental support where, say, you've only been able to do half as much as you were able to do at 100% performance, whereas because of that you were able to then, rely and trust that those people in your circle were able to reach a standard that you would have set for yourself or above, and you could have then put your trust into that to understand that this has been analyzed to the point, and then you can just focus the rest of your energy rather than trying to um, get these pairs and put them in place. You can then just focus on those pairs and learn from each and every one and understand why those are the pairs. So something very important there. But basically, these are the pairs. I did kind of just replace them a bit. I think I had, what was it, GU on there. For some reason, AJ didn't save. So when I went back and looked at all the pairs again, I realized that AJ should have been on here. And GU was probably just put in there to fill the gap. But regardless, they were all still very good pairs. I did end up with 6 on 6, and then with one additional, which is US 30. There was another commodity in here, which indice that I thought maybe could have been of interest, which was the Aussie 200. But I'll be honest with you, looking at my watch list, I'm not going to overdo it. I've already got 3 Aussie pairs on there as well. Sorry, 4. I've got 4 Aussie pairs on there, and then I've got a counter Aussie pair as well. So there is a lot of Aussie related pairs in here. I think there's more than enough, but I think more than likely it may just be worth the effort to add it in there. I think with the fact that I've got Aussie yen and USD yen, I will be having a little brief look at the JP225 as well. Not for anything majorly significant, but if we just suddenly happen to push down and then suddenly push up, and then we break through this, I wouldn't be too surprised. Right, so if you are also keeping an eye on this, just bear that in mind, that we could see some sort of price like this where this then just becomes one more push, like so, for it to go. And then is that just giving it the momentum? I mean, obviously this was somewhat sort of impulse corrective on the way up. Has that fulfilled its move? Not really. There's still a bit more in it, so I wouldn't be surprised if, yeah, we got something like that. And I'll just quickly just look at and measure this onto this. Yeah, it all pretty much lines up to this area here. So even cross-analyzing it with different sort of potential patterns and so forth, I wouldn't get caught into something like this. I think that's just a bit abnormal, really and truly, especially with a continuation at the top there. Wouldn't really get worried about anything over here as well. Only reason being is because how significant really is that? And then you've got this as well. I mean, look, the thing is, yeah, we did sell off from there before, but if we were going to sell from here, we would have had a major reaction. We would have tapped into it and then started aggressively selling off again. We didn't do that. What we did do, in fact, was we got to the high. We didn't quite break it. In fact, we hovered below it, which kind of gives us a good indication that we will tap into it. But I think more than likely, if we do create some sort of pattern on the lower degree here, where we can see this clearly, and we tap into this level here, create a floor, even could push out a little bit be wary of that. We could push out a little bit more, create a bit more of this sort of steepness to it. Taps into, you know, call it this level over here, does this, and then goes. Do not be too surprised. Honestly, don't allow yourself to, you know, be shocked that the market did something like that. And also, you know, you could have something like this where, let's say, market just pushes up suddenly and then comes down into that and then goes. Hey, there's so many variables, but all we need to know is that once we're in trading in this area here, pretty much below here, you want to be eyeing up to go long. You don't want to be looking at the immediate short. The only time you want to be looking for the short is if this sells and then it's dropped down here with good momentum, and then we create something like that. And then just understand that, you know, that's the sequence. Anyway, let's go into our top 6 and our DXY. So starting with the DXY. So the nice thing about the DXY that I'm seeing over here is that we basically have retraced 50% as we saw yesterday. We had the push down, and now today is what I do when I go through my sort of annotations and stuff. So I've really done the analytical side of things yesterday. Maybe I might make a few more tweaks on it, but with this, more than happy now to just take a step back and basically understand that I'm happy with the continuation to downside. So this is just going to be my value area 1 that I'm going to be eyeing up. And then essentially what that means to me is that we've broken through this line in the sand. I mean, essentially my original line in the sand was here, then we retraced up, then we retraced up. This time we broke through aggressively, but we didn't retrace up the same way. In fact, we actually now moving in a continuation, which is something which is different to how this sequence was moving before. So it makes me assume that all of this was one piece of price. This is now its own, maybe creating something a little bit larger, and then the next bit down here, and then we'll see how price reacts to that area there. So a few variations of what could potentially happen on the board there, but like I said, we're trading into the next value area, which I wouldn't be looking for a pullback to the upside from there. Absolutely, just want to make that clear. Or just understand that, sorry, from this value area, we could see something a little bit larger develop if we just kind of just get there. Then we get there here, then I could see something like this, you know, however you want to draw it on, doesn't really matter at this point, but something a little bit larger with depth to then make it a 1, 2, 3, which would make sense, because if you take from this point to, let's just say, to the ray line, and then you drag that on top of there, coincidentally, I believe that is, the VA is at the 50%, coincidentally. Let's have a little look at that. Yeah, it's basically just hovering in that value area zone. So, like I said, very interesting price action there. We'll have a little look at that. We'll evaluate it closer, but just to understand, we broke through this line in the sand with momentum on the daily. The weekly also looks pretty good, how we've closed, but it does make sense for a pullback. Even if we got the pullback here, I wouldn't be surprised. That would still be quite good, because then we actually have enough momentum to smash through this value area and then go. But it's, I would say, like, I think it's better named as an inflection point, because we know that it's an area of inflection, but it's not an area of major value. We just know that there's some liquidity sitting in the area. Price can then just mess about a little bit, catch people on the wrong side of the market, and continue to the downside. So that's basically it for the DXY. Very short and simple. Either looking for larger flag over here, push down, taps into this area, create something a little bit larger, and we go. But then using that information, cross-correlating it with the US related pairs, at that point there in time, you'll then be able to take advantage. So with pleasure, jump into the top 6. Aussie and New Zealand. Now, Aussie New Zealand, for one, I think definitely has a lot of potential. I didn't filter these in any particular order. I usually do that at the very end after I finished annotations and so forth, but for the video's sake, you know, I'm just going to go through it pretty raw. You know, as you can see, basically just finished my morning routines, feeling a little bit better. Did forget a glass of water, so I might have to pause it shortly and just go get one. And then, yeah, so Aussie, New Zealand, we can see on the weekly that we did retrace pretty aggressively back up to the upside. Now, when I did drill into the lower time frames, I did notice that it was very deliberate, intentional price action there, so I wouldn't let that put me off so much. But if you are looking at it in the case of where we've retraced, we are retracing around about that 50 to 60% area. So with the completion of this structure, we either see a sell from here or a full-on retrace back up. It's basically what I'm lining up. So in terms of pattern separation, we can see here we had a near miss, and then we kind of filled it with 1, 2, 3, and then we rejected. It doesn't look super clean on the lower time frames, but when you look at it on the daily, you can see it's slightly more corrective, and then we had this corrective squeeze into this larger correction. We can see on the 4, very similar to this sort of price action over here, where it seems like it's very typical for Aussie New Zealand. It doesn't seem like Aussie New Zealand tends to be very aggressive. In certain market conditions it can be, but definitely on the upside it is. So I would be somewhat a little bit more aggressive with my management when coming into certain value areas because of those sort of aggressive pullbacks on it. But yeah, so more than likely, looking at it on the 4 hour, it is looking pretty nice. The daily was at like, yeah, so we kind of just wick through it, closed right below it, which is not really a problem. We did that in 2 candles on the daily. On the 4, we can see it was pretty much corrective on the way up, and then we kind of impulsed. We got there in, pretty much a few days. I think it was like 2 days. Yeah, pretty much 2 days, 2.8 days, and yeah, so we can basically see that. So 4 hour is looking very nice there. Would I take an entry on this? Absolutely not. The reason being is because you also have this area above, which more than likely, if this then does that, I wouldn't really want to take a trade here, understanding that there's a value area just above it. So don't let those kind of put you off a trade, but just be aware that a risk entry is probably very risky at this point. So keeping it very simple, we have 1, 2, 2 bottoms, 2 tops. We're looking at this as a potential 1, 2, 3 large flag, right? So but that's the 1, 2, 3. This is just a correction before it, which I'm just putting it in there for pattern separation because I think it's important to just see how price has been moving. This typical sort of corrective squeeze here is not really an issue. I would say that, if we did see something like that, that's sure, why not? I could see how that would play. And then if I zoom out to the daily, I can see that, yeah, fine. That's a very strong possibility. And then it gives you this variation of, do we get something quite messy, which is like that, leading back into this area? Probably not, but it's a variation. So without kind of overdoing it here, keeping it very simple, got my override over here, which I'll just mark on. The override's actually invalidated at this point, but I just would like to use it as essentially a line in the sand to see if price is now trading below it to get a continuation. But I will just put it as a override high, and then I'll put it go to the 1, and then essentially remove this and put this in. So any correction under this ray line I'm happy with. So essentially looking at this as the completion of the 1, 2, 3. You could remove this for simplicity, but I've kept it on just to kind of demonstrate it within the screenshots. And then I'm looking for that flag. Within this flag, I will be taking it like this with a 1, 2, 3, and I will try my best. The reduced risk entry, I don't think I would put that off because I could still get away with about 15. So I think in this scenario, I could probably take that, and I'm happy with that. I mean, if I did do the risk, I could. I mean, Aussie New Zealand probably wouldn't. I would probably try the risk entry for sure. Same 15 as well. Only being is because sometimes what happens is when price comes down here to the bottom of the reduced risk, we tend to give a spike up and then go. And if I take that reduced risk, I have a feeling that it's possible that I'll get tagged in, spikes up, takes me out, and sells off. So if I can get the risk, I will. If I take the reduced risk, I will go for 20. Maybe 20, 23, just give it a bit extra. just give it a little bit extra room. So that's basically two variations there, but I hope you understand the reasoning behind not taking too tight off a reduced risk entry, because this pair can be a bit notorious for, you know, getting a little bit sort of, you know, you have the flag over here, for example. I wouldn't take that, but you have that, and then you take your reduced risk, and let's just say for some reason you were tagged in and you did want to go tight with even 15. Yeah, you would have been just tagged out. Bit crazy though. But yeah, just wanted to basically share that and let you know how this pair can be in those conditions in that era. Eurocad as well, go back to the daily. Let's see, so I've got my override here. I am banking this trade on the override at the beginning, so we'll have to wait and see. This is an unconfirmed trend line, so I can completely remove that. It's just used for forecasting. This is just demonstrating a potential low, but for me this looks like it could be, you know, some sort of very messy middle section for something. Can't really tell at this point. Bit too soon to tell. But like I said, keep it very simple. Keep that there, let it push above. Only when we push back down below the ray line, I'll be looking for the entry. I won't be looking for anything above that. I understand that there's sort of this point, you know, that point, whatever. They're not as significant because the same sort of theory behind this trade stays, where I'm just simply looking for price to break above. So even if price breaks above, taps into this area, that area, this area, doesn't matter. Still looking for it to come straight back down, tap into here. Once we've come back into structure, I'll then be looking for it on the, depending on how big this is, this impulse. So if we did tap into a high bit, I will wait for the strong 4-hour impulse, look for the 1-hour flag. However, if we kind of just tap into this, we push down and this flag is a little bit lower, for example, we had an impulse and the impulse was somewhere from here, I could look in for the 15. I'll be honest with you, I wouldn't mind that at all, but for now I'm going to keep it very simple. Just put this up here, probably tighten this a little bit more, but yeah, realistically we'll be looking for a 1-hour flag. I'll be very happy with that. If I do get that 1-hour flag, I think I could get away with a reduced risk, really, because characteristics wise, not really worst. Yeah, you could be about 40 odd pips. I think over here, if I look at it again, let's just put this up here. Let's just say we spike up a little bit. Yeah, we come in. I could probably get away with 25, maybe even a little bit tighter, 23. I'll have to wait and see on that one, but for sure, EC is looking nice. You can basically see the gameplay. If I do size this up, obviously I won't be as aggressive as I would be with how I would be with a lot of trades, but yeah, this definitely has a lot of run in it because we're playing the range. Could run around about 38 over a course of, if we're similar to this sort of run, you can see here how we scoop back up as well. We don't want to see that. 41 days. It could take some time. I wouldn't trade it all the way to low, probably get out a little bit sooner, but that's basically the outlook for EC, looking very nice. EG, okay, so we can see here that we have this as liquidity. So this area of, liquidity. Obviously we tapped into it, the market didn't get enough liquidity, seeks more. We can see that this is the bottom of this sort of larger pattern here. I'll quickly go back to the daily. We've literally come from sort of this very corrective squeeze, bang, into another correction, which definitely does give this some sort of vibes like this, which makes me think that this could go higher, but I'm not going to over forecast at that point and just kind of look at the 4. We can see here that we do have a completion, coming into a completion of a 1, 2, 3 larger flag, and then with an internal 1, 2, 3. And then a middle section, which I'm not going to bother putting that on. So with this one, I'm not going to leave, I'm not going to put the 1, 2, 3 on that. I don't need to see that. We have the internal 1, 2, 3, which once again is just a possibility, right? We don't have to tap into it, but really and truly, is what I'm keeping an eye on, is essentially this whole area here. I'm just very interested in this area for sure. I just want to see how price pushes up, pushes back down. Like I said, you can see how I forecasted this. I'll just put it a little bit more cleaner. Let it do its thing, comes back up into this area, pushes back down, and then only when we've pushed back down, I'll then be looking for some sort of larger flag here. Probably a bit larger than that, but I think that's more than enough. And then, because I don't want to get caught into this sort of no man's land, even though we have this structure, I don't want to base a random trade on a corrective price coming up into this area. I think this could take a little bit more time than anticipated though, so I will probably shift it, say that end of the week possibly. Yeah, something like that. So I would be looking at some sort of corrective price on the way up or whatever, bit of impulse, and then boom, we tap into the 1, 2, 3, push down, get the aggressive trade, and then at that point I can take a risk entry on that. I could definitely get away with a reduced risk though, which I wouldn't mind at all actually. A reduced risk here wouldn't be a problem at all for me. But yeah, happy with that, and then I'll take the trade like this. Be good to go. So can remove that, don't need that. But yeah, as long as you understand the whole reasoning behind this, it's very simple and straightforward. This is more of a structured play though, and looking at sort of these sort of areas, I won't let that put you off the trade. Just understand that we are already in the area of interest and we have more than enough to sell from here. So even if you did have a push, oops, let's say this one, if you had a push and then all of a sudden we started creating the flag down here, yeah, that's still, I would say that's maybe even a little bit higher, yeah, right about there. That's still a good trade. So I'll leave that on the forecast as well actually, because I think you could probably see that this could happen as well. I think this is also sometimes a strong possibility of a trap. So you're getting trapped on the side of thinking that we have to complete, and then we just kind of sell off because we do have the override. We tapped in, we came in once, we came in twice, we're at the override off this override as well as meeting this override. So technically we are sitting at 2 overrides. We didn't commit from there, but then we scooped up again. And then if you zoom in a little bit more, you can see that probably internally, yeah, I mean, it's very messy in here. I wouldn't start trying to force something, but internally we could probably be having this 1, 2, 3 into this override, and then we tap into this, we come back up, and then we just sell, and then we're just like at 3 aligned overrides. And yeah, so like I said, without over forecasting it and just kind of keeping it very simple, we're either looking for a push down and a flag in this area, or we actually make it to the completion of this 1, 2, 3, we wait for the push down, get the flag, and then we go for the short. And then with this one, of course, I'll be taking the risk entry as well. Yeah, so either or, got no issue with that at all. Happy with both. So that's basically my EG and NJ. Let's have a little look at this one. Yeah, okay, so this is New Zealand yen. New Zealand yen, so yeah, so I've got my first value area here, and then I've got my second value area here. Is this the high value area? Yeah, I'll put that as the high value area. So the odds are, if we tap into this, it's very highly probable we're going to go into this point. So I wouldn't want to just say that this is the area we're going to sell from, but we could get a pullback from there to then get the next move higher. So still just going to trade that accordingly. There's a near miss here, which has been highlighted. We have a 1, 2, and then a 3 with a retrace, which is nice. We also have a very shitty middle section. Just have to add that. We can then see over here we have 1, 2, 3, which is nice on hourly. if we get this, it's a no-brainer, so I will be looking for that as a trade below the ray line, kind of working as a head and shoulders. If we do push up, I have kept my protection above this area, so I think that's also a very good bonus. You could probably add a few bit more onto this. I thought 18 was a bit more appropriate, however, I wouldn't be surprised if there was a bit more. Even though the first touch is a little bit subjective, I'm not too phased about this one because it does pop out a little bit, so it's kind of giving me that bit of data to play with. Yeah, I'm quite happy with this. Quite happy with this completely. So yeah, gonna keep that very simple. If I say that this was the line in the sand, happy with that. So now we're trading back below that, and it could be a short-term play, so I would be a little bit more aggressive with management. I would aggressively manage probably to that low, and then wait a little bit, see how price reacts, because we could just come up and create something a little bit more in depth. It could be a Falcon play, could be so many things, and then push down. So I would be waiting, seeing how we approach that area, but I wouldn't want to just mark it on to put you off. I would be looking for a similar sort of price impulse. This sort of correction forms, we get another impulse, another correction, and then sort of gets a little bit more corrective on the way down, and then suddenly pushes back up, because we know that dominantly higher time frame is going to triumph it, and it's going to take over at some point. So we can't expect this in any way to be this short just yet. We have so much room for potential downside here as well, that we could just complete this, and then next year we start making our rally to the high, and then it is what it is. You know, we start looking to go long again. So bear that in mind. There's a lot of possibilities here. Just understand that if we can get shorts, go short. USD Swiss on the weekly as well. I think we looked at this, was very nice. We're coming into clear value area. That is the high value area. Yeah. So this is something of major interest. Let's put that bottom. Then we've got daily. How did we come into here? Well, we did come in here with a 1, 2, 3. All right. So I'll just make that a little bit more apparent on here. All right. So we have a 1, 2, 3 into the low. I'll invert this quickly just for simplicity. We have a 1, 2, 3. We pushed out, and then we had this. Yeah, okay, there is an aspect that this could become a flag to go lower, absolutely. But I think given how price is broken correctively, and then we just persisted, I wouldn't be surprised then if we evolve this, and I'm just going to remove this for 1 second and put it back, is if we get something like, even like that. Would you be surprised that this then becomes the continuation to go in the dominant direction? No, you wouldn't. So then we trade maybe into that. So at the moment we do have this that we're looking at, but I think we have to wait and see. If we can get the trade, we can get the trade. If not, it is what it is. But I think there's a strong possibility that yes, this then does that, and then suddenly, oops, it does all of this mess, and then taps into here, we get something like that, and then we understand that, you know, this is now the range that we're playing with. And then throughout 2024, which is just around the corner, do we then see this as the bull run to then go through the short run, play the range, and then by the end of the year we're back over here potentially looking to go long for the bigger move? Who knows, maybe I'll come back to this video in 3 years and we'll have a look. But yeah, more than likely not bothered about that at all. I think keeping it very simple, so we have potential value area to the upside here. We have another value area over here, which doesn't, this isn't one that I think is gonna be the turning point for me, but I'll definitely keep it on there. And then I'll just adjust that ever so slightly. Yeah, so risk entry on the push down of the flag, just as long as we are basically in continuation with the DXY. So if momentum comes in, we could just pretty much sell off and not give an entry. It is what it is. Aussie yen, on the other hand, Aussie yen, I am looking for the short as well. Very similar to New Zealand yen. Yeah, I could probably push that one up one. And I'll organize these at the end. So we have a sort of, I think I would say that this is more of the higher value area at this point, because the next one is just pretty far above. So I would say that this is our higher time value area at this point. Oops. And this is just basically where I would like to be seeing price trading below, but that can be removed now completely, and we can just look at it as it's a separate entity. Would I take a counter long trade? No, absolutely not. It's possible, but this could just kind of get, there's too many variations of how messy it could become. Even if we come down here, then start come back up, it is what it is. But more than likely, if I take a trade in here and then it pushes back down and then continues this corrective little squeeze in the middle, you don't want to get caught in that middle section. You want to see it clearly, sort of clearly push away from this. And then, this comes up here, comes down here again, then goes up, and then you have something at that angle. It just gets more and more evolved. So I would let it do its thing. I'm going to wait for it to just clearly push above and come back in. And then I will filter in. So after a big strong push away, I'll be filtering to see if it's a 1 hour or 15-minute flag. Ideally 15, just given the circumstance. I would try risk entry that for sure. I think there'll be more than enough room on that. But even if that's a 1 hour flag, I'm still very, very happy with that regardless. Would I take a trade a little bit further up? Probably not. I am looking for this obviously to complete this 1, 2, 3. So we will see it break above, tap into this, and then hopefully get a strong bearish candle, which will be my confirmation on the 4. Looking at how the daily is going to be, I would like to see this over the course of the next few days leading into Wednesday, where we get some strong pushes up. We've closed above up here. Thursday we're maybe here. Friday we get a rejection and then we get a sell. So this would be a late week one for me, but I have still kept it in my top 6 because I think it has massive potential. So I'll keep that there. USD Swiss. USD Swiss, I think I just covered that, didn't I? Yeah, I did. Yeah. And yeah, so they're all pretty much the same, yeah. So we'll keep that going. Okay, so on to the additional pairs. Additional pairs are looking pretty good as well. Looking at this on the weekly, we have a few value areas. So obviously we had this value area at the bottom, which I'll put as the override low. And then we can see here that, how price is moving on the daily. We've pushed away from the override low, which we tapped in multiple times. We pushed away, and then we created this continuation, which is really still a part of this whole corrective squeeze. So if this did start to reject and come lower, and then we started coming up for that 1, 2, 3, I wouldn't be surprised. That's why I'm kind of not interested in the immediate sort of buy now, because we could still come in here, and then we had something like that, that would still make sense, right? So just, I would say, be very careful trading in that area because of the variation of what that could develop into. But more than likely, it's too soon to actually say that, and we could just look at this as a continuation pattern here. So what I would be looking at is keeping it very simple. I would like to see this then maybe even reject from where it is now, tap into this level here, push back up, create a flag, and we continue to the upside. Understand that there's a risk involved where we could just continue lower, and then if we do continue lower, we understand that this could potentially be the next gameplay, push up, flag, and then if that doesn't play, then we understand that the larger time frame structure could take over and we could see something a lot messier, and then we'd have to wait a lot longer. So that would basically be it with Aussie CAD. Very simple, and I'll just put this on as, oh yeah, so just get my annotations on. Override low. Oops. Override low. Override low. Too high. Too low. Cool. And then we're going to trade into this point of interest. Cool. So pretty straightforward with the annotations. They're just there for mainly for the screenshots, just to kind of understand what we were looking at the time, because as we kind of grow and learn, want to improve. I will be trying to take, if we do get this trade, I will be taking the reduced risk, just because this could form into something a little bit more corrective and sell us a little bit more higher risk, because we are still inside this larger structure, if this is the larger structure. And then more than likely I will then be looking at the push down, the risk entry from here, because this is more of a value area, so we'll then see that we are playing this larger structure. So I will be waiting to see how that plays. More than likely though, I'm seeing this sort of the larger structure, and I'll be happy to wait for this larger structure. But I do understand that that's a possibility, hence the reason it's been drawn on. Aussie US dollar, back to the weekly, we can see we have a high value area here. And if you're wondering how I made these, you can just go on template, click save as, create your template here, save as, and you can just save it. Makes your life a lot easier. Go to the daily, we can see that we have a potential of a 1, 2, and a 3. We have a sort of, this would have been the value area, but because of the lack of commitment, I'm just going back to the 1 quickly. I would say that yes, that is our value area, which we should bear in mind, but I will change that to a dotted line just so it's not really cluttering any space. We do have an override in there, but due to that impulsive nature, I just want to see some structure, so I will be looking for some more structure. And what I am hoping for is that we get a pattern within a pattern, completing the 1, 2, 3, and then we can then sell. So I'll just remove this quickly, and I'll be looking for, you know, something like this, and then anyway, doesn't have to be forecasted just like that, but that would basically be the typical sequence I'm looking for. So how I would be taking this is a very plain and simple completion of the pattern, a push out of the pattern, push back in. Then we understand that we're playing within this bigger pattern, trading in this one, which is a little bit higher risk, but this one would then be a lower risk, and then even better. But then this then becomes its own piece of information we have to deal with. In here, could you take the reduced risk? Let's have a little look. Yeah, it's definitely possible. And I think I would be a reduced risk play for me, this one actually. Yeah, that would be totally a reduced risk play for me. Into there, yeah, I could manage that. So yeah, cool. Cool. We could play that just to wait and see how it plays. Good, happy with that. We'd be targeting that area anyway, regardless, which could be a 17 potential 18% trade, but we'll have to wait and see. So that's basically for Aussie US dollar. Let me just tap that on as liquidity and change it back to a dotted line. Okay, this one is the 90% rule. Cool. I don't think it will be the override though, so I'm just going to remove this one, and I'm just going to put point of interest for sure. Yeah, I mean, it's a very valuable area, but it's more for point of interest, because we would want to see that at this point when we reach here, what happens, what really happens. Definitely if I'm in the scaled positions, or we do get really good sequence, I'll probably be getting out of my position. I mean, you're looking at about 100 pip difference there. So for a case of a couple percent, either where we could get a little bit messier, make a deeper range. I don't want to be just holding on to my trades with hope. I probably, if I had like, you know, over 12, 13% running, I would close that. Emmanuel. Let's see. Okay, cool. So New Zealand US dollar daily ascending 123 we're looking for. So we haven't got the completion just yet, but we'll be looking for that. We understand that this was the sort of value area, but with the lack of sort of depth on commitment just yet, we're seeing this become a middle section. So we now could be seeing this as that, and then we see a push down, a flag, and we can go. Would I hesitate on that? Absolutely not. Is it going to be clean? We'll have to wait and see. But for this to happen, we would really have to see something change on the DXY. Right now we're not seeing it, so we'll wait and see. See if I can get the risk on that. Yeah, probably around about there. Happy with that. 6. Cool. There'll probably be another flag in there somewhere anyway. Don't expect that to be a massive impulse. I just draw it on sometimes like that because I'm looking at that as the dominant direction. So yeah, overall pretty happy with that. Another case scenario, we don't commit, we push higher, we create this sort of larger flag, which takes some time, and then if that comes in, then obviously yeah, risk entry for me. Waiting in anticipation, probably put my risk under here, 35, a little bit larger, and then be looking to play to that first point over here, which then could become 10%. So still pretty happy with that. Still could be really good, but I am looking at this as a dominant forecast, and this is the backup. If this happens, it would drive into probably next week, creating enough volume. But looking at the momentum cycle, just going back to the DXY, yes, we can then see that, you know, we kind of could get quite some aggressive momentum to the downside. So if we do get that, then we can see that on counter-related pairs. Hence the reason why if you notice, my watch list and wildcards is pretty much dominant US/yen related. Then I have a few outside of that, just because next week we have some news, which I think is ECB on the US related pairs. So FOMC, sorry, we have FOMC next week, and it's on Tuesday, so I don't really think I'm going to be taking any trades Monday on the US related pairs. But Tuesday comes round, yeah, I'm going to be ready, let the market play its news out, and then once after that has happened, probably start shaping up clearer on, you know, entry. It could be on the same day. Sometimes we kind of just spike to a value area, we then push away, and then that's where the advanced sort of strategy comes into play. But for now, I think simplicity is truly going to be king. Just keep it very, very straightforward. What I would like to see is, and this would be crazy, right? If we get this, and then let's just say we're up here, news comes out, boom, we drop, and then we start to come back up, and then next thing you know, this becomes the larger sort of move, which then accumulates enough volume to negate all of that, and then that becomes the next move. So that was just something I was thinking about, right? Is what if we don't kind of go long? Because everyone's kind of wanting to go long now, right? Because we're seeing the dominant direction, but FOMC comes out and changes things. FOMC can come out and push next to next value area anyway, right? And then next thing you know, we're making our way all the way up here. You go back at it, you look at the DXY on the daily, and you see this, and you're like, wow, okay, well, DXY is already all the way down here. How was I not able to get into here? And so forth. Well, Hey, it's a part of the game, man. Look at this. You look at that, there was an entry there, and then all of a sudden you're all the way down here, and then correctively, you know, start making your way all the way down there. But there was so much opportunity inside this alone. It's just, you know, filtering and learning how to deal with that. So Euro USD definitely still is a wild card for me. I would leave this one blank for now. I'm just going to put the annotations on, just mark on some sort of hook points, value areas, and so forth. Do you know, I'm just going to mark it on as value areas, value area 2 and a value area 1. Nothing of extremes. And then VA3, happy with that. Okay, cool. That is more of a higher value area though, for sure, but I've just marked it on as a value area of 3, because if we go to the daily, we actually look at this. Yeah, that does hold weight, but it wouldn't make sense for it to just reject from here. So I'll just see it as a standard value area, and then as we do push above, we start looking left again. Then we start seeing more points. So what I will be doing right now is I'll just be evaluating this as its one piece of price, and yeah, we'll just look at that as the low. So I'll just put, you know, if you want to annotate this, you just put something simple like low. That's it. That's all you need to know right now, is that was the low. This was a bit of a value area down there, but it's irrelevant now because we are making our way to the dominant upwards direction. And yep, let's just take that off. We don't really need to mark on. So that's just demonstrating that we tapped into the beginning of this overall corrective move, where we can see that we started and then we kind of cleared that, created this, and now this is just becoming one last large range, which is quite nice for Euro USD because it gives us a lot of room for this to play. So I think this is going to be quite a nice run. Looking at the sequence, obviously there was a lot of accumulation through here, but because we had this impulse now, this correction, we could see something similar, and then we get another one next thing you know, and then it gets corrective again. So there could be an abundance of good trades. I think that's a sick trade. My mate took it, and I was thinking like, when I saw it push away, I was like, yeah, that could turn out to be very, very nice. And without just getting a bit too crazy with it, there was this. So you had this section here, then you had the developing that, right? And to me, that doesn't look like the right angle. I think I would personally say don't waste your time with this. I would say just take in everything that price gave you, look at it more so like that, and then evolving it ever so slightly, and then seeing this as that was your retrace there. So then you can take the entry on that. Stops, I put a little bit extra on this one personally, probably like about 30 would be good. Yeah, and already running around about 2% on that, and then you could just jump to 4. You know that into this point you've got about 3, push through, you've got about 6, and then off to the races, as Mark says. So yeah, we'll leave that as is. It's good, it's looking pretty good. We just now need to wait. And then GA, looking for that 1, 2, 3 into this area of liquidity, so the override. So we have 2 overrides, but I think this one over here I wouldn't really be bothered with as the override. I would say that this is your override for sure up here. The reason I have that is because I want to be set into that alert a little bit earlier than when we reach it, just so that I can be more prepared, just because I have so much on watch. I think there's no harm in sometimes being a little bit prepared before anything actually happens. So that's my override high. This is the 1, 2, 3, and then this is my middle section. So I'm just going to mark on here middle section and then let that play, and then yeah, that's it. So basically looking for the trade into that to then go short. I'll be honest with you, I will reforecast this as we get closer to the date, but because it's so soon, I don't need to really overdo it, because a lot can change. This can just start pushing up aggressively, and then next thing you know, we have a different pattern where we have a 1, 2, 3, and then this happens, and then we actually get a different 1, 2, 3, which is here. So, you know, there's many variations of what could potentially happen, but let's just keep it simple and look at it like this for now, and we'll wait and see. So simple middle section completion, pushes down, push back up, creates a flag, continues to the upside. Would I take the flag? Probably not. Wait for it to complete for the 1, 2, 3, and then look for the short. Very simple, straightforward. Next one is USD yen. So USD yen I think is certainly one of my most favorited pairs, but at the moment it's not. What I am looking at is obviously if the other yen pairs are selling off, good. But also we can be seeing that if the other yen pairs are either selling off or going long, and the DXY is also selling off, I would be more in favor for the sell, but understand that we could go long. So what I am really looking at, and after just really looking at this, is I just want to see a little bit more commitment and let FOMC do whatever it has to do. So even if this kind of goes here, FOMC comes up, pushes price up, and then all of a sudden it's getting corrective and then drops, you know, we're still stuck in this massive correction here. So I'm going to leave that one. It's just too soon to forecast right now, but I want to have it on my watch list because I know it has massive potential. Either we drop off, we sell, and then, you know, whatever happens there, and, you know, we'll come back up, we tap into it, then we might have something in here we can take advantage of to go short. But understanding that we could be getting something like this, there's so many variations of what could happen, especially when you have this sort of incomplete, very corrective price action here. So I would be very wary of that, but at the same time, how I'm really saying is the easiest way to look at this is just draw that on, understand that we broke impulsively from this. Maybe there'll be a little correction here, you know, something happens and then it drops off, and then when you get something else shaping up over here, you can take advantage of that. And I think truly, if I'm going to be looking for something, it will be like this. This is how I want to be looking at my trade. I want to be looking at that we had this corrective squeeze, we just tapped into it, maybe near missed by 2-3 pips, irrelevant, but we had then a strong push away, corrective price action, then I can take it into this low here. Even if it means I'm walking away with around about 6 or 7%, it's still pretty good. So I will be sizing that up. Yep, 18 should be okay. Then looking over here, yeah, so 20% even to that low, even after we've missed out on the majority of the run there. I'm happy to miss out on that because of FOMC. I don't want to be stuck into a trade and then be taken out for whatever liquidity spikes are in there. And then obviously if this does continue and gets a little bit larger, we could be running onto numbers which, you know, could lead to a heart attack. So yeah, that's pretty good. So that's essentially what I am looking for on the watch list there. And then we basically have the US 30. Did I annotate that? I did annotate it, didn't I? Yes, I did. Okay, cool. I'll just quickly put on phase line on here. Yep, cool. So that's basically my phase line, and I don't need to worry about the one above. So yep, and then we've got US 30. So back to the weekly. US 30, reason I've got this on watch is because we can see that we have over here, it is far away, yes, but it's good to just understand that where we're going towards. So we'll just mark this on as the high value area. Then we have this as just, you know, I would say this is more for liquidity run. We tapped into liquidity, we pushed away. This is now evolved. This is then seeking new structure, and this is the structure we're playing with. And I just wanted to demonstrate and show that because that isn't the sort of run that you see when we push away from something. So I'll remove these and put the alerts back on. We can then see from a larger point perspective that we are moving to the upside. Okay, that's clear. We go to the daily to actually just have a little look closer, and we can see that, okay, this is an area which could work as an override, but I'm not very convinced with that being the override. I think more than likely what we're going to see now, if we go to the 4, we can see that the sequence that we're moving in, we've moved in a strong push, small flag there, of course, strong push, accumulation, strong push, accumulation, strong push, right? That's what we're looking for. So looking at how the previous structure was, I just want to see if we can get something quite similar to this. So if I take this and I just squeeze it on a little bit like that, yeah, I'll be looking for something quite similar, where we get something in the region like that. I'd be happy to take a trade in that sort of region. Yeah, let's look for this. So we've got this, and then what do we have? We had that. Cool. So yeah, let's just keep it a little bit like this. Then we'll wait. I mean, look, if we get something which is a little bit like that, and then we come back in, cool. I'm happy with this as well. This would be more of your flatter flag over here. And then we'd understand that as something like this. But I think with patterns tending to repeat themselves, it's possible that we might see the same thing again. So I will just put this on like this for now. Not my most favorited structure for sure, but it's definitely there. How would I take this is the next question. So I think this is where the 1 hour would come into play. And I would look for pretty much confirmation when we get to that third touch. It doesn't look like we have to tap into an area of interest, but I will put that on here just as a point of reference. So let's just put a reference point on there. Where is it? There. So the reason for the point of reference is just because we don't really know where this expanding is going to end, and we don't really want to take a risk entry on anything. However, as we can see, once we tapped into it, we didn't really give any clear entries. It doesn't look like we are going to get many clean entries, so we have to understand that this is our clear entry, and we have to be able to read through this. So I'm trying to play the characteristic here, opposed to just trying to play a forecasted structure. I'm trying to play what type of price are we going to be seeing. So if we do get something a little bit more corrective, and then we do even drop into this and we push down and we retrace, I would still look to take that as a risk entry in those areas. And whatever the size of the stop, call it 113, it's fine, because I'm looking to play the bigger picture here. I'm looking to play this into this point, which is roughly around about 6, but then also understanding that we have the potential for this to run to about 16, which probably I won't be sitting in that market for too long, because what is more than likely to happen is price will probably do something like that and then lead into probably next year or something. But who knows, with the momentum that we're seeing, it could be very aggressive, and this is what I'm kind of banking on, that we see similar price action. This then pushes up quite aggressively, creates another flag, maybe a little bit more depth, and then get up and again, and it's just gone with this rapid sort of run. So I'm going to be looking at that very carefully. That is my soft watch pair, so I don't really necessarily I don't necessarily have to take a trade on this pair, but I will be interested to look for a trade, and I think that's where the true value will be for myself. So going into next week now, we can basically say that we have the compiled watch list and wildcards and one soft watch. I think this is quite exciting. Yeah, this is good. I'm gonna now go over and watch my mentors SMB, and then also on top of that I'm gonna go look at a few of the other people in the community as well, see what sort of things they've got on watch, and then see if I analyzed anything, or if I could have done anything to improve. And then once I've done that, I'm just going to go off and carry on with my day. So guys, thanks for watching. It is beautiful to be working this early in the morning. To be honest with you, you look at the clock and you're like, well, everyone is still sleeping. I'm getting up now, and I've literally been able to finish all of this. So I hope you found some value in this, and you see what the true power of actually working, getting up early and doing things does for you. Because all I have to do now is copy and paste this into my Notion and add a few annotations on it. And then I will add the annotations on top of my charts, but I could do that at any point. I could do that later today, but most probably I'll do it now. So anyway guys, have a wicked weekend, and thanks for watching.